Hi, it's Randy Herman with Keller Williams Realty, bringing you Everything Real Estate, the show that just answers all your real estate questions. Today, we're going to delve right into homeowners insurance. Unfortunately, homeowners seems to always be tagged onto a transaction at the very end when, because of the complications and the importance of having good insurance, it really should be delved into way before. And today I have with me Bunny Aronson of Aronson Insurance. Thank you so much for coming, Bunny.
Thank you for having me.
Okay, so you're going to be sharing your expertise with us, and I can't thank you enough since this is such an important issue. So, Bunny, why don't you tell us a little bit about yourself, your background, and your company?
Sure. Well, I have a degree in education, and I fell into the family business 34 years ago, and have specialized in the personal insurance where I educate my clients on the homeowners, the auto, the umbrella, the schedule, to help figure out all their personal insurance needs and how they need to cover it.
So do you deal just in personal insurance or business as well? Or?
Our agency handles everything from business insurance, life, health, disability, long-term care, but my specialty, since insurance is such a complicated commodity, that I've chosen to specialize in the personal insurance line.
Great. And what is insurance? Can you define it for us? Or?
Insurance is that intangible product that you don't know that you need it until something happens.
Right.
So it's basically protecting from a home your biggest investment, from your car, you have a car accident. It includes liability, so if God forbid you hit someone on the street or someone falls at the house, that you get sued. You have a jewelry loss, so it is something that protects your personal assets.
You know, when I was putting together the PowerPoint, I saw a great definition that I love because it says financial protection against unexpected consequences or expected eventualities, such as death. Yep. But I thought that was a perfect way to describe it. So we hear a lot of terms being thrown around with insurance, and I was wondering if you could just explain a few of them. For example, what's a policy?
Okay, so a policy is the contract that you are buying. A homeowner's policy when you buy a home, a condo policy when you have a condo, and an apartment policy when you rent an apartment. It is, the policy is just listing all the coverages, and it has all the details. The policy is a contract.
And then what's an umbrella policy?
An umbrella policy is a personal umbrella is a personal excess liability policy. I literally make an umbrella, put your home, your cars, your family, your pets, your boats, anything personal underneath it.
Right.
If God forbid there's an accident, you have primary policies that would pay the first coverages, and then the umbrella picks up where that leaves off.
Oh, I see. It's like a secondary insurance.
So it's an excess specialty policy that picks up. People use umbrella in all different terms, but the technical form is it's a personal excess liability policy.
Right. And then what's a premium?
The premium is the cost.
And do people usually pay it monthly, yearly? Quarterly?
Some people pay on a monthly basis, some pay on a quarterly. Some of our companies have an installment plan where you can pay 10 installments, 12 installments, 4 installments. Some of the companies have a pay in full credit, so some clients like to pay in full.
So you said companies. Does that mean that you deal with more than just one company? You don't represent just one company, but many?
Yes, we are what's called an independent insurance agency. So we represent over a dozen different insurance companies.
Okay.
So that we're able to shop it as a client has a house. It's not all one size fits all. So we're able to shop and figure out what company is going to get the extra coverage that you need to fit your specific insurance needs.
I see. And then, so it's not just price, it's what they will cover and how they will work with that. All right. Can you, well, we know we were talking about the different kinds of insurance, and you deal mainly in the personal insurance, and the big ones, of course, we always hear about are health and everything involved in health, the life insurance, auto insurance, and of course, homeowners insurance. So can you tell us a little bit about what's required for a homeowner to have homeowners insurance?
Sure. When you are buying a home, a bank requires you, if you're getting a loan on it, to buy a homeowner's policy. And the homeowner's policy We've got software that we use to help figure out what the cost would be to rebuild your house. Many times it's the purchase price minus the land, but if it's an older home, many times it costs more to rebuild it than it does the market value. But we'll insure it, we'll figure out the cost to rebuild it. Let's say it's going to cost $800,000. We will then shop it with all of our companies, insuring the house at $800,000 to figure out which company is going to cover you, not only give you the best premium, we all look at the bottom line, but if you have a sump pump in your basement and you got a man cave down there, you need some extra coverage, not every insurance company will offer you.
Protect that beer and that TV, I'll tell you.
You've got to get that coverage there. So we need
Right.
to make sure that depending on what you need, will that company offer those specific needs.
I see. Okay. Well, that sounds great. Can you tell us what homeowners insurance usually covers? I mean, against,
Yep. Well, it's a package policy.
Okay.
So we're going to insure the house.
right?
Then we're going to insure other structures. So
Right.
if there's a shed, a detached garage, a swimming pool, fences, a tennis court, whatever, then it's also going to cover your personal property. So all your clothing, furniture, computers, whatever you have inside. Then there is what's
That's
called...
like a standard policy?
Yep, it is a standard homeowners, it's called an HO3 or an HO5, which is a homeowners package policy. You may not always need all the coverages that the company offers, but it's a package and you don't get choices on that part with most companies.
Right.
And there's also included in that what's called loss of use. So if, God forbid, there's a fire at your house and it's going to take 6 months to fix it up, the insurance company will pay for you to rent a hotel or even rent an apartment during that time. And
Again,
then
that's part of the standard package?
part of that package, and same thing with liability. If somebody fell and hurt themselves, they're going to sue you. People love to sue, so that there's liability coverage included in, and there's also a little bit of medical payments, so that if someone fell and hurt themselves, they don't have good medical insurance, they don't want to sue you, but they've got a big medical deductible. This policy includes anywhere from $1,000 up to $5,000.
And suppose you're robbed, are you covered that way?
So there's coverage for fire, theft, vandalism, a pipe bursts, that.
So let me ask you a question, because I've always been curious about this. Someone goes away on vacation and their furnace goes off and their pipes freeze, because I've seen it happen.
We see a lot of that.
Yeah, and then there's water damage, because then it thaws and water starts flowing. You're covering that, right?
We are covering that, yep. So
Right.
that the pipe burst, if it floods in your basement
Right.
due to water coming up from the surface,
Right.
that's excluded.
Now, suppose it was done from negligence. Let's say someone just forgot to turn off the bathtub before they went out on vacation. How does an insurance company know that, or how is that determined, or does it not matter?
Technically, there is coverage for that, that you didn't turn it all the way off. And I mean, it wasn't an intentional act, that you just were distracted, you
Right.
did something and you left the house in a hurry and you come home and there's water everywhere. You have a deductible that you'd be responsible, whether it's $1,000, $2,500, and then the company pays the rest.
Okay, so the basics are covered.
Yep.
Tree falls on your house?
Tree falls on the house, there's a hurricane, your house gets hit by lightning, there's a fire, a break-in, vandalism. Those are all what we call covered perils. Those are covered losses that the policy pays.
Okay, good. So what is not covered usually in a homeowner's policy?
All homeowner policies, or I should say all the standard homeowners, flood is excluded.
Okay.
Either you can get a flood policy
Okay.
through the National Flood Association.
And there are flood maps, right?
There are flood maps. In the good old days, we had the literal maps that we had to pull out. Now we can at least get the flood map and all the community numbers online.
And they were just redrawn, correct? I mean,
They've been redone, I think, twice now in the last few years, and the flood
Wow, wow.
insurance has been pretty astronomical for covering-
astronomical in terms of
astronomically
cost?
expensive. Yes.
Oh, really?
That with
Right.
there were so many people that were grandfathered in and have been having flood after flood after flood, and their premiums are much lower, so that they've redone a lot of the zones to help kind of take from Peter to pay Paul, basically.
I see.
And
But this is all government regulated?
it's all government regulated. There are a few companies, Chubb and AIG, who write a lot of our high-valued homes. Depending on what flood zone you're in, we can sometimes add some flood coverage onto the homeowners. But normally you have to get a flood policy. Most agents can get it, but we go through
Right.
the state to get the policies.
Well, just to go over. I mean, we had a deal going in Quincy,
Yeah.
and this new buyer, my client, found out that the house happened to be in the flood zone, and you found out that it was because of a deck
Yep.
was partially there, and he wasn't going to cut off his deck to.
Which would have solved because the premium was very expensive. And if he
Right.
was able to cut that corner of the deck off, which I
Right.
know sounds crazy,
Right.
we try to think outside the box. That if he had cut that off, then he would have been out of the flood zone. But that caused his home to be in a flood zone.
Yeah, and the deal actually fell apart because of that, and as a result, he found another great house in Dedham, but
Yep.
it is an issue. It's definitely an issue.
We've seen every so
Right.
often a house kind of not
Right.
go through.
Right.
And earthquake is another coverage that's excluded, but we can add earthquake coverage onto a homeowner's.
Oh, you can, like what do they call it, a rider, an addendum?
It's just an endorsement,
Endorsement.
an enhancement that's added on to the homeowner's policy. And the premium can range anywhere from $100 to $1,000, $2,000, depending on the type of house, the value of
If
the
you're
house.
sitting on the San Andreas Fault or whatever.
In 34 years, I've never seen an earthquake claim. We are on a fault,
Right.
And many years ago.
We are here?
We are, yep. A couple of summers ago, there was an earthquake in Boston that the buildings were swaying, but didn't hear of any claims. And in Newburyport, there was a crack in the street, I think about 10 or
Interesting.
15 years ago, but we haven't seen a claim yet.
So what happens, and I see it a lot in real estate, if someone has a lot of mold in their house? What happens under those conditions?
Well, their mold is excluded if it's just because there's dampness in the basement. Mold, there's no coverage. If mold develops from a burst pipe, or there was a leak in the roof and there's
see.
mold, the
As a
standard-
secondary
right,
effect.
depending on what caused it, the cause of loss. So what caused the mold? Dampness isn't a covered loss, but
Right.
a pipe burst, that's a covered loss, so the damage from that. There is a limitation on the homeowner's policies of $10,000 for mold. We usually, for about $50 to $60 odd dollars, we usually will increase it up to either 25 or 50,000 in mold.
I see.
That it's a
With
nice
a little
little-
extra additional
Right,
cost.
Right.
So again, and I see it a lot, I see oil tanks that have been buried and start to leak. And I know there used to be oil tank coverage. Is there still coverage for things like that?
We can't write anyone. If anyone has an oil tank in their basement,
In their
the insurance
basement
company,
or?
I mean, underground. So
Underground,
it's
yeah.
usually either dug
Buried.
into the basement
Right.
underneath. That one of the questions is, what kind of heat do you have? If
Yeah.
it's oil heat, where's the tank?
Right.
And not only if it's in the basement, it has to be on a cement slab.
Right.
If it's just on the ground, most insurance companies won't write that.
They won't write the whole policy?
Nope. Nope.
Wow.
When I bought my house, we had to have the tank before I closed. We had to have them remove it. They had
Right.
changed over to gas before, but
Right.
they had to remove the tank.
Let me interject here for a little bit. I'm just kind of curious because do insurance companies, you get the idea that they make a ton of money, but do they make a lot of money?
I mean, the companies make money. Everybody, we're all in business to make money,
Right.
but you will see rate increases every time there's some catastrophic losses. I think since Hurricane Andrew, which was, 20 years ago, or 30, 25 years ago,
Yep.
ever since then, the homeowner rates we've seen increase. For years, homeowner rates were the same. Your policy got increased a little bit because of the inflation. The companies, there were no rate changes. You had a $100 deductible way back when.
Yeah.
And ever since Hurricane Andrew, even though it was down in Florida,
Right.
the insurance companies, everyone around the United States are feeling it. The fires out in Colorado or in California, all the rain, the mudslides, anytime there's a catastrophic,
So in our global economy, you're saying everything affects where we are here in the Eastern Seaboard.
yep, yep.
Wow.
I mean, it's not as big a hit, but we've seen just from a flow of when we've seen the rates go up and down
Right.
that
And who determines where the rate should be? Is this state mandated or?
the insurance companies are the ones that make up the rates, but they have to file them through the state. So they can't just say, oh, we're going to have a 20% rate increase this year.
Right.
They have to justify it and go through the state so that the state has to approve every single insurance company. Just like in the good old days, Mass Auto used to be controlled by the state. Now all the companies can have their own rates,
Right.
but they still have to be filed through the state, the Division of Insurance.
Okay. Let me ask you one other thing, just because it is such an issue that comes up so often, is termites or insects, pests. Is that covered usually in a homeowner's insurance? I mean,
Technically,
obviously,
yeah,
just to
is-
say, let me just finish. Whenever we do inspections, and a lot of banks will require it, we always have like a termite inspection as well. So,
Believe it or not, and this sounds awful, that the house or the porch has to collapse before they will cover. So if you see termite damage, it's basically a wear and tear on the home. It's part of being a homeowner. Your homeowner's policy is not a maintenance policy.
I see.
So you need to check it out, work on it, maintain it, make
Right.
sure that everything is fine on it.
Right.
But it's weird that if it does collapse, that's where
Right.
the coverage does come in.
And sometimes we sell these home warranty policies, which are about $500 or so, which covers, pipes in the walls or covers appliances, utilities. Is that part of what you deal with? Or?
Part of it, in the last year or two, a lot of the insurance companies have started to offer equipment breakdown and service line coverage. But the advantage of when you do buy this separate policy, if you file a claim with them, it's not going to affect your homeowners.
Right.
When you file the claim, and this is not my, I don't always agree with it.
Don't shoot the
People say-
messenger, in other
Exactly.
words.
The people say, I have one claim and I get non-renewed.
Right.
It's not just because of the one claim. They go through credit rating, but if you've had 2 or 3 claims in a couple of years,
Right.
you're going to get non-renewed, and then we have to go to what we call our excess markets, and the rates are higher. So we try to say self-insure. Don't put in the small things. So if there's a
Right.
$2,000 claim, you may not want to put that in.
Yeah, that never seemed fair to me, that you put in a claim and all of a sudden your rates go up to they're trying to get you for having to pay it out. But I guess it's more of a catastrophic type insurance.
Absolutely.
Yeah.
That was one of my first words I learned was catastrophic, and that's what the insurance is for. And again, since I think Hurricane Andrew, where the industry has changed a lot and gotten a lot tougher. I mean, when I first started, people would put in a claim every year, basically to pay their premium, and there were times that they were questionable, and the companies paid it,
Right.
and I think they've been buckling down and saying, hey,
Right.
it's for the big stuff.
So tell me, what do you do as an insurance agent? I mean, what's your job?
My job is to basically protect our clients. That being an independent agent, we represent a bunch of companies, but without our clients, we don't have jobs.
Right.
So we are there to help and guide and walk through the steps. So when someone's buying a home, we have questions that we go through. We talk to the client, we figure out what they need, we put together a package for them for their home, their auto, their umbrella, if they have jewelry that they need covered. And then we put it all together, we get the binder ready for the closing. And then if something ever comes up, they call us. I tell them they can call us once a year or 20 times a year. We'll laugh with you, maybe with you, but not at you.
So if I
but
have
we're
a
here to help you.
claim, I should call you first?
You always call us first, because there are times that, depending on what the claim is, as soon as you call the company and insure it, it's a black mark against you.
Oh, really?
When you call us, the independent agent, we log it in our system, but we'll say, go get an estimate. Let's figure out, is it worth filing the claim? Because what's going to happen is we see on the other end, and that's where we say, don't shoot the messenger, that the consequences. Gee, you've had one claim in the last 2 years. Let's go see what the estimate is. If it's $2,000 in damage, you can put it in. We're never going to say no, but we're going to advise our clients, and that's
The best
where-
course of action.
Right.
So where does someone get an estimate like that?
If it's from a homeowner's, you call a contractor and just say, please come out and look at this. Give me a ballpark of what it's going to cost. For a car, when people have auto claims, before you get surcharged, we'll say to them, go get an estimate. If it's a little fender bender, again, I don't like our advice, but welcome to Massachusetts and our Safe Driver plan.
Oh my God, every car has dented fender in
Yeah.
Massachusetts.
So the advantage and disadvantage when you are with what we call a direct writer, like Geico or Liberty Mutual, that when you call them, they're reporting it. It's already there.
I see.
When you go to an independent agent, we're going to talk and advise our clients and walk through it and say, it's up to you, but do you want to do it? I pick up so many clients, I see they got paid $600 on an auto, and they're getting charged like $400 a year for the next 5 years.
Oh my gosh.
So that they've paid for that so many times over for
Oh,
what they
yeah.
got, But the companies don't always educate and tell the client the pluses and
Right.
minuses.
And so I have a question for you. How do you keep up on all of the changes that are happening? Because I know in real estate, rules, mortgages, everything is changing constantly, and it must be the same in your industry.
It's every time we turn around. In order to maintain our insurance license, we have to take 45 hours of classes every 3 years to renew our license, so that we're always taking courses. We're involved in our insurance association, and so that we're always getting emails or memos from them, now emails, on what's going on or to be prepared for something. Every time our insurance company has a new enhancement or a change on coverages, we'll get an email and an updated policy so that we'll make sure that, if a client, if it's going to be affecting them, that it's our responsibility to let them know.
Right. So let me ask you, since you do have to keep up on all this and you have constant education, what are the qualifications for becoming an agent? Do you have to take exams? Is it like being a securities expert or?
I'm not a securities expert, so I don't know that. But when I got into the business, I was in the business for a couple months, and I went and took some courses, and then I had to take my insurance license, which was not easy, and I don't think I could pass it now. But I took the exam, and then
I'm sure you could pass it with your eyes closed. Come on.
The first 3 years of once you get your license, you have to take 60 hours of classes, and then every 3 years after that, you have to take 45. So it's like 15 hours of classes a year that we try to take to budget it out.
So I know you're not a lawyer, of course, but since the contract, the policy is so important, do you read through each one? Is it standard? Do you go over it with your clients? I mean, how do you decipher what's in there?
I mean, the homeowners policies are standard. What we do is, as we talk to the client and figure out what they need or what they think they need or what we want to let them know that there isn't or is coverage on, I'll point certain things out. I mean, we do give them the policy saying you're welcome to read it. I mean, I can't sit there and go over the 26 pages of the policy with them.
26 pages?
26, some of them are even more than that because they have different enhancements that we're adding on. So
It's interesting, a contract, a purchase and sale agreement is, 6, 7 pages, 26 pages, good Lord.
At least, and some of them are 30, depends on the policy, the company, and all that. I mean, what we do read a lot is when someone's buying a condo, we need to read the insurance section of the condo docs to figure out who is responsible for what. The bank may say you need 20% of the appraised value, but I'll read it and say, oh no, the master policy is covering it. They just need to cover their personal property, their liability, and loss assessment.
Do you suggest that people send the insurance policy to a lawyer to look over, or is that really not necessary?
I don't think that's really necessary.
Right.
I've got my attorney license, my clients that are attorneys, and they usually say, "Here, Bunny, tell me what to do."
Right.
They don't even read them.
Right. So when we come, let's say you take out an insurance policy and a tree falls on your house, there's a big storm, et cetera, and you put in a claim, and there's probably 50 people in the area who are putting in claims because it was a big storm. You hear about these horror stories about it takes years to get paid and it takes forever for the adjusters to get out there. Is that true, or is it just, what is the truth?
What is the truth? I have to say that during the winter, February of 2015, when we had
10 feet of snow.
10 feet of snow, we had over 1,000 claims in like a month, and that's just one insurance agency. That the insurance industry did get inundated, and yes, normally within 24 to 48 hours, an adjuster is calling a client during what we call a CAT loss, a catastrophic loss, where we were telling clients 3 to 4, maybe 5 days. No one realized how big it was going to be.
Right.
And the clients are trying to get contractors because the adjuster would say, go get an estimate.
Right.
We've come up with a value, we'll give you that, but if you don't think it's right, you have to get a contractor and give us an estimate and we'll review it.
Right.
Unfortunately, there's no what they call cost containment law on homeowner claims. On auto claims, there's a cost containment law. So every body shop can only charge, I don't know if it's 38 or 40 something dollars an hour, and the parts, there's a chart for all that. Homeowners, there isn't.
Really?
And it
so
really
they can
is too
gouge
bad.
people or
So
whatever?
that contractors were going out saying, you want me to do it, it's going to cost $5,000, and they got an estimate for $3,000. And they know that they're gouging, and of course they make the insurance company look bad. And it's
Right.
like, hey,
Right.
we can't, you know, if they ended up paying all those $5,000 and $10,000 claims based on the estimate, everyone's insurance would just go up astronomically. So
Right.
that we're all paying for it one way or another.
Right.
So it's a really,
Right.
that was a tough time.
But let me ask you just quickly, kind of a yes or no. Do you think that the insurance companies are fair in the way that they evaluate these claims?
I think they are. Sidebar, no one's perfect, no company is perfect. You can every so often get a bad adjuster or someone with a bad day. We're all human. And that's again where your agent comes into play and you call them and say, hey,
Right.
I got a question, something doesn't sound right, help me. And as more involved you get us, the more proactive, the more honest you are with us, we'll fight to the end for you. But if you don't tell us that there's a problem,
So you
we
become an
can't fix it.
advocate for your clients
Right,
as well.
that's basically, we are an
Okay.
advocate.
So we're kind of running low on time, but I was hoping you could tell us, maybe give us a little story, an example, an illustration of how insurance, homeowners insurance, saved someone or was a godsend to someone.
Recently, I am in different networking groups and get referrals, and one of the mortgage guys who I'm friendly with, I guess, got a binder for his client and I guess didn't read it right and realized 2 days before the closing that it wasn't adequate and they couldn't help him. So I get the phone call and I'm quickly stopping what I'm doing, and for the next 3 hours I am putting together the home and the auto and the umbrella package.
Right.
And made sure I work with the closing attorney and the mortgage broker to make sure I've got the wording for the binder, get the applications, and
Yeah,
I make
nothing
my-
closes until we
No.
get that insurance
Nope.
policy.
Takes people years or months
Right.
to find a house, and they think insurance is going to be like that. And it's like, it's your biggest investment. At least 3 to 4 weeks ahead of time is what I advise my clients to call us, to give us the time so we can shop it, to make sure that we've done our job,
Right.
and it's not a rush job.
Well, it's like any insurance, people think it's a kind of a waste of money until finally they need it.
Right.
And then it's a real godsend to be able to go on with your life once you have that. And so, like you were saying, during the winter of 2015,
It's awful.
a lot of people relied on that money
Yeah.
to keep going. So I want to thank you so much.
pleasure.
This is
Thank
great.
you.
We could probably talk for a lot longer.
I
And
can.
yeah. Do you want to give the viewers your contact information so that if they have questions, and I'm sure many people do have questions,
Absolutely.
that they can give you a call
Sure.
or email you?
Okay, I'm Bunny Aronson at Aronson Insurance, and my email is bunny, BUNNY, at aronsoninsurance.com. My phone number is 617-965-3030, extension 134, or 781-444-3050, extension 134. Thanks.
Yeah, Bunny, thanks again. And I can't get over, you've been in the business 34 years. That's amazing, but you must have seen so many changes to your industry. I mean, certainly I have in real estate, and I haven't been there a third of your time. So I'm just kind of curious, what is the biggest change you've seen?
I think the biggest change and the most challenging is when Mass Auto went competitive 8 years ago, that your home is your biggest investment. So we shop and we find the company to insure your home, and we would just write the car and the umbrella with that company. It was just, didn't matter. And nowadays, with all the media, all the commercials that have been going on, 15 minutes will save you 15%. First of all, that's not true. It
Right.
takes a lot more than 15 minutes, and I've seen the Geico or those policies, and they're not 6-month policy, we write 1-year policies.
Right.
So as people have been shopping, it's been frustrating because people aren't always giving us the opportunity. They get a quote somewhere cheaper, but they're not comparing apples to apples, or they're comparing a 12-month policy to a 6-month policy.
Right.
But finding out that cheapest is not the best, that you sometimes really do get what you pay for.
Right.
So that if you want the right coverages, you want to talk to someone that's going to educate you and figure out what you need.
Okay, well, thank you so much for those words of wisdom. And please call Bunny if you have any questions at all about homeowners insurance.
Thank you for having me.